Today, a MasterCard executive says widespread adoption of CBDCs could be difficult. The FBI arrests 3 men in an alleged $10 million crypto laundering scheme. And Rettig, the chief legal and policy officer at Polygon Labs, weighs in on regulatory advancements both in the US and overseas. Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies headed lower to close out the week, with Bitcoin dropping about 1.5% over the past 24 hours. It's back below $36,000. Ether sinking more than 4.5% to $1,900, and Solana also giving up more than 11% after a rally on Wednesday pushed it above $60. If we pull back and look at the week, we got a bunch of news around Bitcoin and Ether ETFs, but it wasn't enough to keep the momentum for the crypto market. Bitcoin fell around 4% in the past 7 days. Ether tumbled more than 8.5%. Solana, though, is a bright spot for the market. It's still up more than 6.5% on the week. All right, let's get to the latest headlines. Payments giant MasterCard thinks widespread adoption of central bank digital currencies might be a ways off. The company's blockchain and digital assets lead for Asia Pacific spoke to CNBC at Singapore's FinTech Festival, and he said there's not enough justification for the widespread use of CBDCs, which makes broad adoption of them, quote, difficult. He stressed that if someone has CBDCs in their wallet, they should have the ability to spend them anywhere they want, just like cash. The International Monetary Fund has said that CBDCs are a, quote, safe and low-cost alternative to cash. He also noted that a lot of the central banks have gotten innovative because they're working closely with private firms like MasterCard. But since consumers are so comfortable with today's type of money, there isn't enough justification yet to have a CBDC. Next, 3 men have been charged for allegedly participating in a complex scheme to steal more than $10 million from nearly a dozen U.S. banks and financial institutions. Authorities say that money was laundered through foreign crypto exchanges. According to this announcement yesterday from the U.S. Attorney's Office for the Southern District of New York, the 3 have been arrested and face a slew of charges, including bank fraud conspiracy and money laundering conspiracy. In a statement, U.S. Attorney Damian Williams said these charges should serve as a warning to fraudsters and cybercriminals who think they can turn to cryptocurrency to hide their identities. Last, after about half a year of public input, the Global Standard Setter for Securities Regulation published its crypto markets policy recommendations. According to CoinDesk, the International Organization of Securities Commissions, or IOSCO, denied crypto industry requests for a bespoke regime for stablecoins, but agreed to demands for greater accountability from financial influencers. The recommendations were published yesterday after a consultation period that started back in May. The goal, establishing a coordinated global regulatory response to the risks presented by crypto asset service providers among the group's members. Those risks include market manipulation, insider trading and fraud, conflicts of interest, as well as client asset protection. All right, sticking with crypto regulation for our main story, Crypto World's Talia Kaplan sat down with Rettig, the Chief Policy and Legal Officer at Polygon Labs, to discuss regulatory advancements abroad and in the US. She weighs in on which region is winning the race when it comes to crypto regulation and explains what lawmakers in the US should prioritize following the trial of Sam Bankman-Fried.
I want to focus this conversation on regulation, especially because you spend so much time in DC meeting with policymakers and regulatory authorities. And speaking about crypto, I can imagine that a big goal is to educate them, but I'm wondering how effective are these conversations, and is it proving to really inform them and educate them about this nascent industry?
Actually, it is, and I would say the industry has been working on education for many years, to the point where there are certain policymakers in DC and members of Congress who are really conversant with the technology, what it means, all the catchphrases we all know and use. And I will say we just did a crypto policy boot camp a few weeks ago in conjunction with the Solana Foundation to also educate founders, investors, and others in the space about how to go out, educate, and engage on the Hill and with policymakers in the US as well.
Can you take us through how crypto regulation is enforced right now here in the US? Obviously, we've seen a lot of regulation by enforcement, with agencies like the SEC going after crypto companies, including Coinbase, which was sued by the agency back in June. What do you think about regulation by enforcement? Is that the right approach, or is more of a comprehensive framework needed?
I think it's unquestionable that a more comprehensive framework is needed, and we have that from Congress, both in the form of the Fit for the 21st Century Act, which made it out of 2 subcommittees in the House on a bipartisan basis, and with the stablecoin bill that also made it out of 2 House committees on a bipartisan basis. And I think that that's even been acknowledged and that it's been moving forward even just out of committee is really important. But I also think that crypto is not unregulated in the United States. A lot of the centralized players are licensed as money services businesses, as have money transmission licenses throughout the states, and are really working to work within the current regulatory framework, at least when they're involved in centralized crypto asset activities.
Now, you beat me to it, but obviously we have seen some regulatory advancements here in the US, including the Financial Innovation and Technology for the 21st Century Act, or the Fit for the 21st Century Act, as you just noted. But do you think that's enough? What do you make of those developments? Do you think more needs to be done?
I do think that's enough if it really moves forward in a meaningful way. Fit for the 21st Century is looking to be very comprehensive for centralized crypto asset players and for crypto issuance in the United States, and really split regulation between the SEC and the CFTC. Much of Fit for the 21st Century mirrors what is called the Markets in Crypto Asset Regulation, or MiCA, in Europe, which is also a very comprehensive law for centralized crypto asset activity and token issuance as well in the EU. So I do think that that's a great first step, and it's incredibly comprehensive. So in terms of what's more, as I said, we also have money transmission licenses and other certain types of licenses, which does cover certain types of centralized crypto asset activity.
Do you think the Fit for the 21st Century Act will actually get approved?
I think there are a lot of priorities in Congress right now, and I'm not sure if crypto is the primary one or moving FIT. I do know that Chair McHenry is very motivated to move FIT, certainly out of committee and onto the House floor. And I'm hopeful that, to your original point about education, that there's been enough education that people understand why having regulation in the US is at least something very important to consider for the crypto industry.
Now, you mentioned MiCA. We have seen a lot of regulatory advancements overseas in places like the EU, as well as Singapore, Dubai. MiCA was the first comprehensive framework for crypto regulation in the world. What stood out to you in that framework? And do you think there's anything from that framework that lawmakers here in the US should perhaps take and incorporate into a bill here in America?
Great question. MiCA was born out of the concept of Libra. And the idea that if you were going to have something new that was supposed to act like money, you at least needed to have regulation around it. So MiCA started back in about 2017, 2018, and we just saw it pass, 4 or 5 years later. I think there's a lot to take from it. First, that you really should be looking at centralized crypto asset activity as a primary place to begin with creating a regulatory framework, right? We know how to regulate centralized financial type of activity. So I think that's one part of MiCA that's really, really promising and important. It does exempt services that happen in a fully decentralized manner. So MiCA doesn't touch DeFi, and it also doesn't touch NFTs now. And I think that's a really important takeaway for everybody who's thinking about crypto asset regulation, because this is extraordinarily novel, a lot of innovation, and does not, as I said before, sort of fit in the traditional framework that we think of when you think of centralized economic/crypto activity.
It's important to note that MiCA is expected to take effect next year.
That's right.
But what region would you say wins the race, so to speak, in terms of crypto regulation? Is it the EU?
I don't think it is the EU. I think there's been some interesting information that right after MiCA passed, there was a lot more VC investment in crypto businesses in the EU, but I don't think we've seen that all take off as much as everybody has expected. I do think that Circle has started creating a headquarters in France, and I think other Coinbase and others are looking to also find EU type homes as well, but I don't think that everybody is going to pick up and move to the EU. I am hopeful that the US really takes a lead here to make sure that there is a good framework to continue building out this industry, but I actually think that Asia, which has actually been engaged in crypto asset regulation for longer than people have even talked about. Japan has had good regulations for centralized crypto asset exchanges for a long time, may actually win the race long term.
Do you think it's too late for the US to catch up to the rest of the world as it pertains to crypto regulation?
No, I really don't. I see the surprise on your face. This is the US has been the home for innovation for a very long time, and particularly with Web 2. People do see this as an important market and an important place to build out technological activity. As I said, Asia is also extremely attractive, Dubai as well, including with their really great regulatory framework that they've been putting together. So there's certainly a race right now, but I don't think anybody will count the US out, particularly with the fact that there are 2 bills, at least, that have been out there and have passed out of committee.
What do you think lawmakers here in the US should be focused on now, especially following several scandals and bankruptcies, including the collapse of FTX, which was put back into the spotlight recently with the trial of its founder, Sam Bankman-Fried? Of course, that resulted in a guilty verdict. But what do you think lawmakers can do to restore the trust that was lost following events like the collapse of FTX?
I think it goes back to your initial question about education. I think they need to educate themselves fully to understand how this industry works. I think, to your point, there have been lots of headlines that grab people's attention, many of which aren't based in facts or are really meant to be clickbait in a number of ways. And I understand why that is interesting. And I think there's been a narrative around crypto for a long time that it's, used for illicit purposes or not meant to really be something that's part of our everyday lives. But crypto is part of people's everyday lives now. And I think understanding that, accepting it, and seeing how the technology works and how the ecosystem has been built out, both from centralized players, what DeFi is, NFTs, and understanding that will allow lawmakers to put things in place that allow this ecosystem to grow responsibly in the US.
So going back to the trial of Sam Bankman-Fried, we've recently got that guilty verdict. I'm wondering, as a former litigator, what was your reaction to that and the quick deliberations and the fact that the jury deliberated in just, I think it was 3 hours or so?
It's pretty rare that a jury comes back that quickly, having done a number of trials. In my former life, juries do not come back that decisively on multiple counts unless they are quite sure. And it was, I think, says a lot about how the trial went and how forceful the prosecution's case was. But I also think U.S. Attorney Damian Williams really said it best when they were waiting for the jury. He said, it's not about crypto, and this is not about Sam Bankman-Fried. This is about a tale as old of time of financial fraud. And I think that's what we all thought when it happened. And I think it's true to this day as well, that it's really not about the industry, but it's much more about a traditional fraud.
All right, Rebecca also explains what to expect from Polygon in 2024. You'll be able to catch that full interview over at cnbc.com/cryptoworld. All right, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.